Well, let's move on. But the markets are, of course, wobbly, but more news and updates. The first one is what's happening on tariffs and otherwise. Now, US is all set, of course, to impose reciprocal tariffs soon. Okay, I need to get my remote. Meanwhile, Commerce Minister Piyush Goyal is set to head to Washington, D.C. to meet US trade officials today. What's on the agenda? Rishabh has more details.
What we're seeing coming in from the trade talks between the India and the US, a very crucial move coming in from India. Union Commerce and Industry Minister Piyush Goyal is set to visit Washington. In fact, he is on a visit there. Currently, he will be meeting key trade officials from the US, including the US Trade Representative Jamieson Greer, as well as Commerce Secretary of State of the US, Howard Lutnick. Both these meetings will take place between March 4th and 6th, and talks will revolve around, of course, the tariff concerns that are coming in from the USA. The US is set to impose tariffs, the details of which will be made available starting April. And Goyal's visit is remarkable because he is going right before that deadline. The talks will obviously also talk about the bilateral trade agreement, the BTA, which is sort of being looked at as a mini trade deal between India and the US. These two will be the sort of the defining points of this visit by Goyal. What will also happen and what we're also likely to see is that India will skip the retaliatory action. So not a very aggressive stance. It will be not looking at a tit for tat sort of situation, but we will be looking at actually just reducing the number of tariff lines that we have on certain exports that go to the US, as well as cutting duties on a number of product lines, a zero for zero strategy, if you will, and also invite the US to cut down tariffs. And that is basically what an FTA is. It reduces the sort of trade barriers, both tariff and non-tariff between two countries. So this is what we're expecting from CIMs, the Commerce and Industry Ministers' visit to the US. We will stay tuned to his visit and keep track of all the details coming in.
We sure will be. Thanks for that, Rishabh. Now, what this tariff war otherwise has done is brought a lot of stocks to their knees, literally. And while markets maybe, you could argue, consolidating, a bunch of stocks have actually gone below their COVID lows. Right, and Varsha has listed some of these out. She joins with a summation of what some of these stocks are, their valuations are, and what the management commentary has been around some of those. Varsha, take it away.
Thank you for that. So yes, we all know that markets have been under pressure since the last 2 months. In fact, to just give you some data points, over 450 of Nifty 500 stocks decline in February, and Nifty records longest monthly losing streak in 28 years. While there are some stocks which are trading at below their COVID low, and let's see what are their outlooks. So if I were to talk about the few stocks, you have Bandhan Bank, you have Johnson's Control, PVR, Inex, Relaxo Footwears, SIS, VST Industries, and Whirlpool of India. These are some of the stocks which are actually trading below their COVID low. And if you see the valuations of this company, if I talk about their PE ratio, so basically majority of them, the PE ratio of majority of these companies are trading below their historical or the median level. So if I were to consider Relaxo, so if you see the PE of Relaxo, PE is almost 60x. But if you see the median PE of Relaxo is almost 103x. So all these stocks are trading below their COVID levels. But we need to also sort out what are the fundamental analysis or what is the management commentary when it comes to all these stocks, and what is the growth outlook, whether one should consider buying these stocks. So let me start with Bandhan Bank, wherein they are aiming 55% of secured mix by FY27. And they are expecting credit loss to stabilize near 2% with managed slippage. Next on the list is Whirlpool India, wherein they are actually focusing on premium products over volume. So the growth will come from the premium products versus volume growth. And some of the new launches are in pipeline. So you have glass door refrigerators, innovative washing machines, which are expected to come in the future. And next on the list is SIS. So they're expecting growth 2x of GDP, but they have actually reiterated that they're going to maintain 15% of CAGR growth, what they have been doing since listing, and the margin goal, so they're expecting 6% pre-COVID EBITDA for their security and FM business. Next on the list is Relaxo Footwear, wherein the whole focus of this company is how they're going to improve their margin on the back of end-to-end optimization that the company has been doing. Last on my list is PVR INEX, wherein they are expecting strong 2025 with blockbusters, and also they are expanding 100 to 110 new screens in FY25, and they are expecting growth on the robust lineup, which including Chava, which we have seen that's done very good on box office, and also War 2. They are expecting growth on behind of these two releases.